This year, we're looking at over 5 million units of vehicle export from China. And then of that, less than 50% of that would be EVs. But if we look at the EV exposure, about 16 to 17% each goes to ASEAN markets as well as South America. And then about 32% of that goes to Europe. For US or North America, it's just around 2% of that total. So the exposure to the US is very, very limited at this point, and it's mainly just two brands, i.e. Volvo as well as Polestar, which is actually two European brands. Now, if we look at the European exposure, it's 32%. It's actually, the headline number is very high. However, if we break that down, actually close to 90% of these exports are foreign brands, including Tesla, MG, Volvo, so all of these production bases of European brands in China.
So on balance, Tina, if the clear and present danger is from protectionism from Europe, then how material negatively could that be for the China OEMs?
Right. So if we look at the additional tariff that's been put in place at this stage, it ranges from the low of 17% to the high of around 40% for different OEMs. So we actually did some sensitivity analysis among our coverage. For example, the one end of the spectrum is BYD. We estimate it's only going to be about low to mid single digit impact of BYD's earnings in 24 and 25. On the other side, SAIC, who owns MG brand, they're going to be put a 40% tariff, and their earnings impact is going to be about 10 to 20%. So that's sort of the range of impacts we're seeing at this point. And that is assuming none of the incremental tariff gets passed on to the dealers in Europe or to the consumers there. So we keep the price stable.
Tina, I have to ask you, if most of the exposure, a third of the exposure for China EVs is to Europe, and a lot of that is actually foreign brands which are made in China, which are then shipped over and sold in Europe, how much pressure is there on Chinese EV brands to offshore, or rather, I guess onshore would be a better phrase. In other words, investing in capacity, manufacturing capacity for their brands in Europe?
Right. I think the way to think about this, if in the longer term, the Chinese brands, they want to build a sizable presence and the long-term presence in these European or other overseas markets. Eventually, localization is the way to go to scale up to hire local workers and to contribute to the local economy as well. So some of these like bigger companies like BYD, they are doing that. They are putting a factory in Hungary. However, if you're not going to reach that over 100,000 units level anytime soon, then it doesn't really make sense to invest in the capex and then to have very low factory utilization rate in those overseas markets. It's the relatively better or more practical choice is to produce in China and export to the overseas markets.
Tina, would you agree that parts makers, part of the supply chain for Chinese EV brands, are they a good leading indicator? In other words, if they onshore and set up plants and make their parts in, say, Southeast Asia or even Europe, that's a pretty good sign that the big brands are going to follow.
I think two things about this. The first one is the parts makers that are currently setting up offshore bases. They're actually supplying to the overseas OEMs. So, for example, like if we're talking about the U.S., it's mainly Tesla, because as we know, Tesla has a lot of parts suppliers from the China market. And then the second thing is, as the China OEMs, they are going out and setting up local production bases, the parts makers might also follow them outside as well.